This is Jay Martin.
If you don't know what's around the corner, that's when you want to hedge into the lifeboat, right? And we've seen many central banks all over the world over the last 3 years hedge into the lifeboat, in this case being gold, in a major way. You're in this business, Matthew. What can you tell me? Gold's obviously at all-time highs, and it, the difference between this gold rally and the last couple is that this one doesn't look to be a false start, right? There's a lot more action going on here. So talk to me about the demand side for gold right now. What are you seeing? What's catching your eye? Who are the main buyers? And how is this activity different from maybe what you watched in like 2016 or more recent rallies?
Yeah, it's a very important question. Obviously, again, at the most obvious level, I think it really, Egon's been in this space for decades. He was far more farsighted as a mentor than I was. I was a credit guy, and a risk asset guy. And I could spend hours on how I figured out that was a trap in terms of currency. Measuring your wealth in a paper asset was a dangerous thing. It forced me to think about insuring my paper wealth with something that was a better store of value than a declining asset. But past that, the main difference now, we've over 78 all-time highs in 2025 in the gold price. It's the best performing asset in the markets right now. It's up 25, 26%, better than anything else. But that's just price action. And by the way, for the last 20 years, and measured against the S&P, you can pick your statistical window. I get it. For the last 20 years, gold has outperformed the S&P total return. And the only other asset class that's done better is private equity. I just wrote an article about that. It was 12% annualized, and gold was just over 10. But private equity is on the downturn, not the upturn. And gold has been outperforming, and it's only just beginning. And the reason why was many reasons. Gold is rising because paper money is declining. Paper money is declining because debt levels, that first point we talked about, it's all derivative debt. When you're monetizing your extraordinary debt with debased currencies, gold rises. The rise in gold is very simple. And of course, if you and I can figure that out, and many people who follow you already have known this for years, they've been buying gold at 1,200, 1,300, 1,800, 2,600, 3,600. It's only the first two chapters. I'm not saying that to sell my book. It's just the direction of the hockey puck in currency debasement because of unsustainable, insane debt. And the reason we're saying this so differently today than, say, 10 years ago, gold bugs. Again, Egon was a gold bug at $300. Gold's well over 3,000. Is he a gold bug, or is he just a smart, far-sighted understanding of sound money and the historical debasement of fiat? But even if you're just coming to gold now, well, it's clear that when we weaponize the US dollar, again, regardless of your views on Putin or Zelensky, freedom fighter, Hitler 2.0, that whole thing, when we weaponize the US dollar, that was a big moment. That was a big mistake. I think one of the greatest mistakes in our own foreign policy. It has nothing to do with patriotism or thinking Putin's good or bad. We weaponize a neutral reserve asset. The rest of the world trusted it less. Not only do we weaponize that asset, that IOU from Uncle Sam, that 10-year FX exchange key component, that 10-year US bond, is from an issuer that's massively over its skis in debt. So our credibility is lower and our trust is lower. And so central banks in the world, right around the year that we weaponized the dollar, gold purchased about 118 tons annual. Then it went to 290 within a couple of years. So the central bank purchasing of gold is a quantifiable fact. And they're quantifiably stacking gold because they're quantifiably trusting the US dollar, not ending it, not destroying it, not killing it, but trusting it less. And they're trusting that US 10-year less because we issue too much of it. Anything that you oversupply loses its sex appeal. Too much of something is not as appealing. If there's a rare Bordeaux wine, you buy it because it's rare. But if there's billions of bottles of it, you'll buy it for nothing because it's no longer as valuable. It's the same with our US IOUs. They're just too much of them. So they're losing credibility. And then we weaponized it. So the simple answer is central banks, sovereign wealth funds are buying physical gold because they're looking for a better store of value than the dollar. They're storing in gold and spending in fiat, which is what Egon's been doing for 30 years. And our clients in 90 countries have been doing for decades. They're not looking just at the gold price. They're looking at the waning power of their fiat money, whether that's a peso, whether that's a yen, whether that's a dollar, Canadian, Australian, or American. More people are maybe figuring that out now than 20 years ago because they're just looking at price action. Price action is creating some attention. But what they really should be looking at is store value, purchasing power. And I think Central banks are really driving the price right now. But still, family offices, less than 1% allocation of physical gold. They're deep into private equity, a declining asset. They're still deep into U.S. Treasuries, the worst performing asset in the last 5 years, down 50%. But the mentality of being in that family office, being a CIO at a bank, the diversified portfolio where you have to be in Treasuries, they're one of the worst assets. And the yield on the 30 years is a joke, but yet it's better than the Chinese yield or the Japanese yield. But a 5% yield on a 30-year IOU, do you think that's going to have any value 30 years from now? So this crazy stubbornness, this resistance to understanding gold, there's a vested interest in it's not being taught in schools. It's a very obvious threat to the US dollar system. It's a very obvious signal that the modern monetary theory has been a failed theory. It's been a failed solution. It's an admission of our criminal negligence and our sound money fiasco in the last 50 years as well, the gold standard. So gold is still the ugly girl of the dance, even though she's the best dancer, clearly, at the dance. And so as people understand that more, I think there's going to be a radical change. And there already is because of platforms like yours and others, not because we're selling a book, but because we're giving critical thought to the problems in the fiat money system and in the financial global debt system. And as people figure that out, it's no longer a risk asset. It is an insurance asset. It is a store of value. Central banks know this. The IMF knows this. The BIS even made it a tier one asset, not for political reasons, because it's obvious. It is simply holding its value better than an IOU from a debt-strapped nation that's over its skis in debt and has no immediate solutions in sight. So again, it's not selling my book. Gold at this price is still very early in its long-term chapter. It just is. It's going to be a better store of value. It is going to be, and it already is, listed as a tier one asset on the balance sheets of banks. Just years ago, it was a tier three asset. So, I mean, these things are happening right in front of our eyes, but they're not being discussed. Again, partly because the media is completely ignorant of it, and partly because they have a vested interest in not talking about it. This is why, look it up yourselves, inform yourselves. Don't just follow me because I have a vested interest and a conviction, but certainly I have a bias. But all of us who really were in the gold space long before it became sexy have seen this for years.
Most investors think they're playing it safe, following mainstream advice, chasing trends, and clinging to the herd mentality. But there is nothing safe about mainstream advice. The smartest investors know that real wins come from thinking independently and spotting opportunities long before the crowd. And that's what we teach at the Commodity University. This is an exclusive membership designed to arm you with the skills from the sharpest minds in the mining investment world. Each of our professionals has a proven track record of finding trends before anyone else. At the Commodity University, you'll gain access to a highly curated and growing catalog of courses covering what you actually need to know to become an informed commodity investor. Every single month, you'll receive a brand new course packed with insights from the best in the business, giving you the edge to stay ahead. If you're tired of following the crowd and ready to invest smarter, think sharper, and understand the mining industry like the professionals, then take the next step and join the Commodity University today.